And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. Great to have you join us, Ladi Williams. First off, let's take a look at what's happening with commodity markets. Now, we see oil prices jumped today about $1.40 and traded at $84.57 a barrel in early trade. US WTI crude futures also rose about $1.17, about 1.5% to $78.39 a barrel. Both benchmarks gained more than $2 earlier, and they will drill down on what's moving the commodities market later on the show. Into other news now, Nigeria and the UK have signed an agreement to pursue an enhanced trade and investment partnership. This was revealed at the 8th and final UK-Nigeria Economic Development Forum in Abuja. According to the UK Prime Minister's trade envoy to Nigeria, Helen Grant, a potential enhanced trade and investment partnership would include commitments to tackle non-tariff market access barriers to deliver tangible results for businesses in both the UK and Nigeria. On his part, the Minister for Industry, Trade and Investment, Mr. Adeni Adebayo, says the reduction on tariffs on products should be a win for both Nigerian exporters and UK consumers. Meanwhile, total trade value between Nigeria and the UK currently stands at £5.5 billion. Meanwhile, the Nigerian Export Promotion Council, NAPC, says the export performance of the nation's non-oil products has increased to $3.9 billion between June and September this year. The executive director of the NEPC, Mr. Ezra Yakusak, made this known during the Export for Survival walk organized by the council in Lagos. Take a listen.
This walk, tagged Export for Survival, is part of strategies which targets the sensitization of Nigerians to think export, grow the economy, and create jobs. From the Tafawa Balewa Square, officials of the Nigeria Export Promotion Council commenced the walk through major streets of Lagos, sensitizing residents on the need to improve the nation's non-oil export base.
I had earlier informed Nigerians that from July to June we had a $2.5 billion export performance. I'm happy to also announce that from January to September, just 3 months after, the non-oil performance has increased to $3.9 billion 3.9, and that's good news for us. So what I'm saying is that as we are doing this work, as we are sensitizing Nigeria, as we are rolling out various interventions program and initiatives, we are seeing the result of our work.
Figures from the Nigeria Export Promotion Council shows that between June to September this year alone, non-oil export rose to $3.9 billion, with Lagos State contributing over 70% of the bulk of exports. Some of the exporters speak on why they have decided to trade in non-oil exports.
When you import, you are losing so much money because you are exporting your jobs to other countries. Where your youth should be gainfully employed, other countries are getting from it and we are importing what they're doing. But when we export, the job stays here. When we export, we get the foreign exchange and our, balance of trade can become balanced.
After the walk, exporters who are making track records in growing the economy were given awards at a separate event. The essence of the recognition, according to the council, is to spur other Nigerians to invest in non-oil business.
The NEPC has involved various programs and activities that have helped shape the economic landscape of our great nation. We are more than ever before determined to further develop and implement strategies that will not only create awareness of the non-oil export sector, but ultimately increase and expand the volume and value of our non-oil exports.
The latest drive by the government in looking away from petroleum resources is seen as a step towards boosting non-oil export, creating jobs and foreign exchange earnings for the country.
And now to our first conversation. Well, it's countdown to the general elections continue, and candidates of various parties are sharing their manifestos and making promises which should win the votes of Nigerians. And the economy is top on the agenda, as it's common knowledge that these are not favorable times in the global markets, which includes the Nigerian economy. Apart from federal stage, let's take a look at the subnationals now with the PDP governorship candidates in Akwa Ibom, Mr. Umar, and joining us via Zoom. Great to have you on the program.
Thank you so much for having me. Good morning.
Good morning. So currently, states have been accused of depending so much on the federal government and not exploring, resources within. In your view, what can be done differently?
Well, I think it's common knowledge to everyone now that oil is really, there is a limit and there's an extent to oil. So what states are doing, particularly states like Akwa Ibom, is to look at agriculture. Agriculture is a major source of any revenue right now. And so we believe that you can invest in agriculture and open up all of the value chain that agriculture brings. And that will improve our export earning. We're investing heavily in agriculture in Akwa Ibom, and we intend to continue with that trajectory by the grace of God if we get into office. The state government is putting up, now the things we couldn't produce in the past here, like tomatoes, onions, and all of those, cucumber, we're doing them now, we're producing them in Akwa Ibom. And then we're investing heavily in oil palm, which Akwa Ibom had been known for in the past. The government has revisited the moribund aqua palm and is investing now with the hope of attracting a central bank support to be able to boost oil palm. The state government has built a coconut oil refinery, and we're investing heavily in coconut virgin oil. So that agriculture is the way to go, and to steer us away from oil. That is what we're doing, and that's what we intend to continue. Yesterday I was in Abak, it's an oil palm zone. The first oil palm, the first fruit, was picked by the Malaysians from Abak and taken to Malaysia. So if we just drop the ball, there's a need to go back and ensure that we bring all of this. The land is still there, it's still fertile. It's just to have the right leadership, the determination to do what is right, and to ensure that we get back to work. I think that's the way to go.
And talking about, investments in agriculture, investments that requires funding. Where do you see funding, coming from? Are there any risks to funding?
Funding, there's the funding itself from your budget. You can deliberately. It's about where there is a will, like my governor would say, when the passion is right, then you can get things done. Where there is a will, you can, from the budgets you have, deliberately set aside funds to tackle agriculture. And if you're doing very well, you can also talk to other African development banks. There are other banks that want to support agriculture business-wise, so that you can get into the full value chain. There are always people and organizations willing to fund agriculture if it is done right, if it's not just the subsistence farming, if it is done in a commercial level where you can be thinking of export. And for us in Akwa Ibom, you also know that very soon Ibome will begin to do regional flights. And with that, of course, you think of having your cargo terminal, and then you begin to see how you can export some of these agricultural products and earn foreign exchange too.
And obviously, we know the issue of power supply has long, been a challenge in this country. What are your prospects, in the face of, renewable energy, solving this power issue?
Renewable energy is the way to go now, and it's just that we need to begin to look at partnering with organizations to be able to get renewable energy into the state and indeed the country. But for Akwa Ibom, our problem may not necessarily be power generation, because We have a power plant that generates much more than we need in Akwa Ibom and put into the national grid. The problem is distribution. And we believe that if the federal government can grant state licenses to distribute what they generate, then we'll be able to provide power for Akwa Ibomites. We have generated enough power, to be able to, but we put them in the national grid and then distribute again back to us. So it's a problem. We need to break that cycle. Once we're able to break that cycle, then it will help us to generate and then distribute. And I think that is the way to go right now, so that our people will have enough power, at least for the state, because we're generating.
Right, and we know Akwa Ibom State has a hospital which is tagged, world class, and yet it's hardly made any impact on medical tourism. What do you think is missing?
No, the hospital, yes, is there, and what we need to do much more is to ensure that to qualify to be a medical, for medical tourism, you have to open up the space. And what we plan to do as part of our strategy is to take this hospital along the Korekpene axis, open up all of that area, and deliberately drive medical tourism. There is a Marriott hotel about 20 minutes down that corridor. The roads are open. It's just to create the whole of that area and be able to put in place the facilities you need beyond the hospital itself. When people come and probably there's a surgery, they need to recuperate somewhere. They need to have a park where they can do exercises. They need to have a diagnostic center just around the place there. There need to be a good logistics that brings people from the hotel to the hospital. All of that is in a package. So the hospital itself cannot drive medical tourism without all of this accompaniment. And that's what in our blueprint we seek to achieve, so that with the hospital that is there, the Ibom Specialist Hospital, between the hospital and the Marriott Hotel, which is sitting there, and the corridor that you have, you can create a whole lot of things happening there to boost medical tourism. If you go to Dubai, you have what is called a medical village. Now, when you get into the medical village, it's not just about the hospital. It's about a whole lot of facility that surrounds the hospital. And that's what we believe we want to put in place, so that it can help our people and people visiting the state to have a full value chain service as they go to the hospital. The hospital is good, there are professionals there, and we can bring in more. But we just need to ensure that the facility to drive that is completely available.
And yeah, we did get that report, from the MBS that 133 million Nigerians are multidimensionally poor, no access to health care, a good job, good standard of living, and all of that. What do you think? What's your plan to reduce the number coming out of Akwa Ibom State?
The plan to get people back to work is properly encapsulated in our RISE agenda. If you take the RISE agenda, you see the plans we have clearly. We want to invest in agricultural development. We want to invest in rural development and then infrastructural maintenance. Then we go on to security. We go on to the economy, education, and environmental management. These issues are, once you can put that properly in place, then you'll be able to create jobs. Agriculture itself creates jobs. Then you go on to the rural areas. You develop our tourism potential. Akwa Ibom has the longest coastline in this country, and we need to develop those beaches and ensure that we have about 21 tourist sites in Akwa Ibom. We need to develop all of that and then support it with good security, so that people can feel safe when they come into the state. Once you are able to open up the state, like it's done now, to the glory of God, we have Ibom Air, and people can come in, from Abuja, from Lagos, and from all over the place, and then have to have a good tourism potentials available in the state, so we can have jobs, our people can work. Government alone will not be able to drive jobs, but you can bring in investors. Once the atmosphere is, the state is safe, is conducive, is investor friendly, you can look at your ease of doing business index, and you can help investors to settle in properly. Job will come naturally, and then support the small, medium enterprises, because 60% of jobs are created by SMEs, not necessarily the big organization. So you invest heavily by supporting the small, medium enterprises. And this is the way to go at the moment, to create jobs for our teeming youths. Because if we don't do anything, then is a time bomb waiting to explode. These youths, as they come out of school, must have jobs. And then beyond that, you also teach them in school so that they can have a secondary option. Some of them will, so that while in school, they can learn a trade, they can do something, so that when they come out, they themselves can be employers of labor, be job creators, rather than, be job seekers. These are some of the ways we intend to open up the space and let our young people be able to get something doing, because it's becoming alarming each day, that everyone is just sitting waiting for government alone. Government alone will not do it. We need to encourage entrepreneurs now.
And talking about alarming, the debt issue right now in Nigeria, we see there as of Q2 2022, Akwa Ibom State had an external debt stock of $46 million and a domestic debt stock of about 203 billion naira there. And obviously, the debt is a real issue right now. What is your plan to still be able to fund most of these projects, yet reduce debt?
You see, all of these debts, and short, they have their time span. They have how to be able to, you don't just pay it up in one time, they must have, so you look at all of that. You look at all of the time span, you work that through with your accounting people, through your budget. And as a businessman, I know that you owe the banks, but all of that will come into when you look at your budget, you look at your financial analysis, and you'll be able to see why servicing the debt, the things you can do with the other funds that are available. So, and while you are trying to generate other internal revenue for your state, there are other ways you can generate internal revenue to meet up the demand of the things you want to do. So debt will always be there. It's okay, but you really need to sit down and look at it and then talk about it and see how you can prorate the payment in line with the agreement that the state had entered into. And some of the things that the state invested in will of course begin to yield revenue at the time to be able to fund the repayment.
And what's the plan to actually, make sure that some of these debts that are already taken and will be taken in future actually are used towards the development of the state?
Now, the debts that have been taken, if you get to Akwa Ibom today, you will know that it's been used in the development of the state. There are major landmark things. For example, this is the only state in this country that have invested heavily in the aviation industry. You need to, apart from Ibom Air, you need to know that there is the MRO, the maintenance, repair, and overhaul hangar that is almost completed. You need to see the new terminal building. There is an effort. That investment in the aviation industry alone is heavy. And you know that there will be returns, obviously. There's investment in infrastructure, and most of these infrastructures are economically driven. So there will be returns on them. So the facilities are not just acquired for, recurrent expenditures. They are acquired for assets which are commercially vested. So in the future, of course, that is the only way to go. You cannot be taking loan for consumption. It's not doable. And if, as as an entrepreneur, I know fully well that if you have to survive, you cannot be acquiring loan for consumption. It must be for strategic assets that will be viable and help the state have a return on investment over time.
All right, I want to thank you so much, Mr. Omoyinno, PDP governorship candidate, and wish you luck in your endeavors. Thank you for coming on the show.
Thank you so much indeed. Thank you for having me.
All right, we'll take a break now. When we come back, commodities market update is next. A lot happening in the commodity space, a lot of volatility. We'll drill down on that next. Just stay with us. This is Business Morning. All right, now for commodities market update, we have Bolanle Agbaje join us right here in the studio.
Hi.
Great to have you again, Bolanle, and a lot is going on.
Thanks for having me.
Yeah,
yes,
a lot is going on right now.
Yes, unfortunately.
Yeah, in the oil market, we saw a lot of volatility. We saw that, dump yesterday, talking about Brent, WTI, but it's a different story this morning.
Yes, and I think the different story has come because everyone is watching what OPEC would do in retaliation. There was a Wall Street Journal that came out, an article that came out, I think last week, where they mentioned the fact that they expected, OPEC to not cut output, but with what's going on right now, it seems like, with their December 4th meeting, they're most likely to, either cut output or leave it the same, but it's most likely to, go the other way. And at the same time, most people believe that even if they do cut output, it will just be numbers in terms of Saudi Arabia being the only one to pull back, because most countries have not been able to meet their quota. So it might only be technical, but at the same time, it would still signal, the higher prices that OPEC Plus is looking for. And also, notwithstanding the fact that, the price cap is also coming into effect on the 5th of December as well. And it will be nice to see how Russia responds to this. Obviously, at a price, I think some of the price speculators are suggesting that the price would more or less hover around $65 per barrel. And obviously, that's not going to be taken lightly. It wouldn't even be taken lightly by Russia. So it would be nice to see what they will do in terms of either restricting supply or, supplying at that price or, restricting supply. So it's a very uncertain time for oil prices, and it'll be nice to see how it unfolds within the next few weeks. And obviously the policy rate meeting, the US Fed meeting happening on the 14th of December as well.
And talking about the price cap, it looks like the EU and G7 have not been able to come to a consensus.
Yes, because it's a very hard decision. You're dealing with someone that is not, normally when you have decisions like this, the whole team is, in the meeting trying to figure out what's best for all countries. But in this case, you have countries deciding what, would happen or how another country would sell its oil reserves. And it's a very uncertain type of decision to make. So I can understand why they're struggling with it, and they don't want it to, come back to them in terms of them as consumers. So all of that is why they're still struggling to find the right price for them, and seeing which countries would also follow suit in terms of following that price that they determine.
And it's also a tough, balancing act, trying to make sure there's still supply to the global market.
Yes.
Because we've seen Russia say they will not sell to countries that, place a cap,
yes,
on their oil. And at the end of the day, I'm wondering if they stop selling. Obviously, that's another risk.
So if they stop selling, the only option is for oil prices to skyrocket, and that's obviously not a result that the European Union and the G7 would want, especially the US. It's not what they crave for at this time. And so they're looking for where their power lies in terms of finding ways to make sure that the price cap is imposed when it comes to Russia. And
the deadline is about next week.
Yes.
What happens if they don't reach a price
within
cap?
this next few weeks, our hands are tied. We're watching, closely to see what happens. And it's just a very interesting time. We've never really been, we've never really been speculators to this kind of, situation. It's a very peculiar one, and it's just, for me at least, it's very interesting to see how they're able to, bring a country down in terms of the supply and the price the country can get from
like
the world.
Bringing a huge giant, trying to muscle that giant
yes,
down.
that giant down.
Definitely
yes.
not easy. All right, let's look at LNG now. We see LNG prices are also down.
Yes, and that's just because, from summer this year, I think at about August, you had seen the European Union try to build on their gas reserves significantly, embrace for the winter, or the harsh winter that they expected. And winter, unfortunately, has not been, it has fallen, way below what they actually expected. It's actually better than what they expected. And obviously, that's due to climate change. Nobody really can figure out or can hit the nail on the head when it comes to what kind of, extreme weather they're going to get. So it favors them, and they've been able to build their gas reserves for up to about 94%, I think. And that's, that's great for them. But it obviously, going forward into 2023, when they've used these gas reserves over time, it'll be nice to see what happens to LNG price. The likely scenario is for, prices to inch up, significantly. And yeah, so that's just what's driving the market. Although we did write about, the stock market issue, and those are technicalities, but, what's keeping the price down at the moment is because the gas reserves are filled up.
All right, let's look at the cocoa harvest then, Cross River State, saying it will extend.
Yeah,
To next year.
so obviously the harvest it's great. I guess the weather that we're facing now is great for us, and it's a buoyant harvest. But what does this mean for us? It means that it will translate into, most likely, into our external reserves, which is great. In a case where you don't have, a buoyant harvest or an extended harvest, you most likely get the opposite. And cocoa has been, good for us at the moment, although the pricing factor and the fact that, Ivory Coast and Ghana are still struggling to get to a point where they can, keep prices at a certain level, or a price floor at a certain level. I think the price they were looking at was about $2,600 per ton, and currently the price is about $2,400. And it's not necessarily great for those countries. I think Ivory Coast had increased supply during this period. So obviously, going forward, we'll be entering the planting season, and obviously that means there'll be reduced supply from our country at least.
All right, looking at all these commodities now, we've seen them hit record highs,
Yes.
this year.
Yeah.
But it looks like the prices just want to go down
It
from
wouldn't.
here. So have they peaked?
So it'll be hard to determine if they have peaked, and that's just because once you get into the new year, January, February, you're more or less entering the planting season again, and what that does is that it boosts prices even further. We don't see prices declining anytime soon. Obviously, the fuel scarcity, so increased cost all around the cities in Nigeria, and it's not necessarily, it would definitely translate into higher prices. And, inflation figures have already faced, the heat, especially when it comes to transportation.
And with the queues we're seeing right now, that means the inflation figure for November.
It's likely to increase, although it would be nice to see what the impact of the higher interest rates would have on, money supply, and all this, the situation of releasing the new Naira notes and all of that, and how this unfolds with the country at the moment. But at the same time, the fuel queues, it's one thing to have fuel queues, and it's another thing to be buying, the pump price of petrol at ridiculous, amounts. I think the black market charges about 500 Naira per litre. Is ridiculous. And so many people, in order to not waste time, they've been able to, they had no choice but to result in purchasing that type of fuel. And obviously that translates into higher prices. Although in December, it's not uncommon to see fuel scarcity, but this recurrent fuel scarcity that we're seeing at the moment, and it seems like it's not going anywhere for now. It'll probably be coming off and on, and it's not necessarily great. This kind of uncertainty is not necessarily great for businesses, for individuals, consumer households within a country. It makes them less efficient, and it's just this December is bearish.
Right. We can't really say dirty December.
No, I don't think so.
And obviously, we did see that.
And it's a bit quiet as well.
Yes, it's quite quiet. Yeah, and we did see that headline, yesterday, talking about the real price of, PMS once the subsidies taken out, about 400 naira.
Yes, yes. And, you know, you're seeing the same price with diesel. Like, diesel is about 800 naira per litre. And that's because it's reflective of what's happening, you know, in the global atmosphere.
Right.
So if, obviously, I'm not surprised by, you know, that price that they've come up to. But at the same time, it'll be nice for the government to do away with this subsidy and just make things a bit more clearer. In a case where, you know, you're allowing the price, you know, float and see and, you know, be determined by market, you know, by the market, you would have a situation where it wouldn't be sustainable to, you know, create this artificial fuel queues by all these, you know, by the different depots that exist in the country. You know, in a situation where you have a particular filling station charging, you know, whatever price that they feel like charging, and there's no fuel queue there, it would obviously incentivize other, you know, filling stations to do, or either, you know, break the price or just to attract market. And,
right,
you know, the market can more or less reflect for itself. So it's the uncertainty with the price is just, you know, it's just not great.
All about price
Yes.
right now. Thank you so much, Bolanle Agbaje, analyst, financial derivatives company.
Thank you for having me. Thank you.
All right, so we'll take a break now. When we come back, we head on to the markets. Just stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channels Television. Let's head on to the markets now, starting with the fixed income market. We have Anete here with the details. Anete, I'm seeing bearish moves in this market.
Good morning, Laddie.
Morning.
Yes, yeah, I think we're starting off with the fixed income market. And of course, that market has about four in the segment. First, the bonds, the treasury bills, the OMO, as well as the central bank special bills. So, and then what you see on the board here, which I'll be showing our guests,
right,
it just points to some sell pressure for the FGM bond, which was traded on the FMDQ exchange. So then I will be giving you other details for the rest of the market.
Fantastic.
Right. So let's get started now. For the bonds markets trading at the FMDQ OTC exchange, the total number of deals carried out as at Monday was 11. And then across the board, where you see here, it's 2 deals across the board for the for the March 2027 paper. But then at the long end, the short and the mid segments of that market, we saw sell-offs, particularly on the April 2023, the April 2032, and the July 2034 papers, respectively. So that is how that market turned out at the close of Monday's trading session. Now, flipping over to the treasury bills market, it was on the flip side, it was on the bullish side, and that's because investors there demanded for the 87-day to maturity bill, the 108-day to maturity bill, as well as the 332-day to maturity bills, respectively. So this is how it turned out. A little bit impressive, 29. But when you look at the board here, 10, the highest concentration or the highest attraction was for the 9th of November 2023 paper, which are 10 deals worth about 56.96 billion naira. Let's move over to the OMO market. That's it for the OMO market. The OMO market average yield there, it slipped by 1 basis point to about 10.1%. But this is what you saw for that market, the 14th of March 2023 paper, which had 4 deals at a total value of 26.5 billion. Now, flipping over to the last segment of that market, the central bank special bills, which had the highest number of attraction, was on the 28th of November 2022 paper. So 5 deals for that market. Now we will be talking to Samuel Bameke, who is an investment research analyst at Meristem Securities, to give us more information about that market. But before that, let's take a look at the equities market. The equities market at the close of Monday's trading session, it's just made the bears made a return. So now let's talk to Samuel Bameke. First, we'll be going to the fixed income market. Thank you for joining us, Samuel.
Good morning, Anete. Thank you for having me.
Yeah. Now, of course, as our board had shown there, if we take a look at that board, it's actually the equities board, but you'll be giving us more information about both the fixed income market as well as the equities market. But starting first with the fixed income market. That market, last week we saw the central bank the central bank's monetary policy committee raised its interest rate, benchmark interest rate to 16.5%. And at the same time, we saw FARC inflow. So now, how's the market going at the moment?
All right, thank you. So last week, we saw the Monetary Policy Committee raising its, benchmark rates by 100 basis points to 16.5%, and it is a positive one for the fixed income market because the expectation is for yields to rise, especially in primary market auction and we somehow saw that play out in the TB market last week. We saw rates increasing on only the 364-day instrument to about 14%, while the 91-day and the 182-day remained constant. Then we saw a little bit of liquidity. So on the supply side, we saw rates move only on the 364-day instrument. But if you look at the demand side, there was oversubscription. And that was because of the somewhat liquidity last week, given the FARC allocation. So we saw a lot of investors, thronging into the market to, actually, bid. And the range of bid was about 17% at the T-bills market last week, while the secondary market was bearish. And that bearish market also flowed into this week. We are seeing that somewhat bearish sentiment flowing in the secondary markets as investors are really more attuned to, the PME, that's primary market auction, because of the expectation of rising rates at the PME.
Okay, so now looking at this board, it says a red market, and now if we even take a look at the sectoral performance, it's a mixed picture. And so far, we saw that 64.12 billion was knocked off, no thanks to profit taking on 17 equities, the likes of Boa Cement, International Breweries, GTCO, UBA, as well as Access Corp. Now, we saw that the market was going to react to profit taking, but that at the same time, we think investors are going to react to the CBN's monetary policy rate hike, which is coming. This is a week after. So how is that affecting the equities market as we speak?
All right, so last week in the market, for 2 weeks now, we've seen some kind of renewed optimism in the market. Previous week, it was the financial services, and last week it was it was across all index, except the oil and gas index. And we saw the NGX ESI closing to about 6.88%, with market rate at about 2.75 times. That was massive, renewed, positive sentiment in the market. But the dynamics still remains the same. The movements we are seeing is basically on the large cap stocks. That means on heavyweight tickers, and that was what we saw last week, and we saw that play out. And they were drivers. So they were the liquidity, like I mentioned. The liquidity was also, part of the driver. But that doesn't mean that we are out of a bearish market. In the middle of a bearish market or a bearish run, you could still see some times where the market would close up. You will still see some times where you will see that positive sentiment, and the dynamics is still largely the same that we've seen since the bearish run started. And then we've seen at some weeks we'll see the bellwethers, driving the market up, and then the other week we'll see profit taking on such tickers. And last week we saw Boa Cement, especially GTCO, closing up, and yesterday we saw them closing down. However, I think it's too early to call the direction of the market this week. Although the general expectation is that the positive investors are able to sustain that, positive optimism in the market for this week. Now, speaking to the MPC hiking rate by Audrey's business point, how will it affect the market? Okay. Since April, the MPC decision has already affected the market, and we think that investors already priced that into the market before this week. So we are not expecting much of an impact in the market again.
Okay, Samuel, thank you for that analysis. Time is never your friend when you're having fun. But We keep our eyes on the market. That was Samuel
Thank you,
Bameke, investment research analyst at Maritime Securities Limited.
Right.
So, Ladi, so that's it for the markets.
Okay, so
and I think my crystal ball says the
optimism.
market will be in the profit-taking side continuing.
Profit-taking. Thank you so much. That was Anita there giving us the details for the markets. Let's head on to the UK now. We have Juliana standing by right there. Great to have you, Juliana. Good morning. So it's all about what Rishi Sunak is saying right now. He said the so-called golden era of relations with China is over. What reactions are we getting from this comment?
Good morning, Laddie. There have been mixed reactions to Rishi Sunak, the British Prime Minister's first kind of public speech on foreign policy. This was given yesterday evening at the Lord Mayor's banquet in the City of London. And we know that China is going to be a major section on foreign policy for the UK in the next couple of years, because, of course, it is an evolving global power, and it's a global power that the West are just unable to put their finger on. So Rishi Sunak was kind of outlining his plans. I think Britain's relationship with China has, of course, changed over the past few years. There wasn't a golden era, and I believe that was a bit of a snub that he gave to his predecessor, David Cameron and George Osborne, the Chancellor, because, of course, they rolled out the red carpet. Xi Jinping came to the United Kingdom to meet Her Majesty the Queen for a state visit. There were suggestions of much closer ties, and I think Britain certainly back then thought that if they did become closer to China, then perhaps some of their ways of working in the world would rub off on Beijing. That's not happened. We've seen that there has been more aggression. There's been more of an aggressive stance on Taiwan, more of an aggressive stance on Hong Kong. We saw during 2020 and in the beginning of last year that there was mass arrests, most notably for some who were British and Hong Kong dual nationals. Many of them are still lingering in prison. So now it's kind of what next, and that's going to be a huge headache for Rishi Sunak. He's not going to be able to please both sides. There are some pretty senior backbench Tory ministers who have been sanctioned by China for speaking out against how Uyghurs are being treated in Xinjiang and in other parts of the country. There is also civil disobedience right now. Just last week, we had a senior minister in the UK saying that they wanted to ban any Chinese-made security surveillance from the country. So, you know, there is going to be a long way to go. It is a very delicate subject. China is a global superpower. There is no way that Britain cannot do business without it. But now it's kind of like, you know, is this just going to be more rhetoric and standing on a platform and speaking out against China, or is more action going to be taken? And I think the vast majority of Conservatives want Rishi Sunak to take more of a hard-line approach. He isn't going to do that, and I think that is going to cause some unrest in the party.
All right, we'll keep watching out for that. But on the flip side, we see the UK has reaffirmed commitment to strengthen and deepen relationships with Nigeria. Tell us more about that.
Well, yeah, that's right. That's been happening on your side of the pond, actually, right. Laddie. Not here in the UK. It's happened in Nigeria. I know that Helen Grant, the UK's trade envoy, has been in Abuja. I believe she was in Lagos too. She met with the Honourable Minister Otumbani Adebayo for the 8th Economic Development Forum. It was held here last year. This Economic Development Forum was put in place by the former Prime Minister Theresa May alongside President Muhammadu Buhari to strengthen Nigeria-UK economic ties, just to make it a lot more easier, less bureaucratic, to get more support from the UK side when it comes to bringing in Nigeria exports into the country. I know that's something that the Nigerian government are keen to expand on. We know that trade volumes between the two nations has reached over £5.5 billion. And basically what they were saying with a handshake
taken a signature, is that they want to improve on that. Good thing is we do have a British Nigerian at the helm, Kemi Badenoch, a fan of the show. She is the UK Trade Secretary, a very culpable, capable woman who does want to expand these relations. And I think, you know, for the vast majority of Nigerians here in the UK who are doing business with Nigeria, they want it to be more transparent. Right. We know that small to medium-sized enterprises are the heart of any giant economy. So there's no point Nigeria-UK relations being so opaque and only for the big players, and nobody smaller never gets in, because it's the smaller players that really make up this vast slice of the pie. So let's wait and see, but it does appear to have been a very successful, fruitful meeting. Yes, it does appear it was actually fruitful. Thank you so much, Juliana. I'll talk to you later on. Thank you. Thank you. All right, let's head on to other markets now. We see some jump in the crypto market there. We're seeing Bitcoin there recovering some of the losses we saw yesterday, just like, you know, the global equities market, still following, you know, the trend we're seeing in that market. If we look at the sentiment in the market today, we see it's 26. Not as good as what we had yesterday, but it's still fear in the market. Talking about the sentiment, let's look at the price. The market cap, actually, we see the market cap there. We see a jump in the market cap. Talking about the total crypto space, Bitcoin and the altcoins. If you give me the market cap, we see it's actually up this morning. Let's bring in Rume Ofi now, digital market analyst, to bring us up to speed. Hello, Rume. Hello, Rume.
Good morning, Larry. Good morning.
Morning, Rume. Great to have you. I can hear you perfectly clear right now. I guess it's safe to say another one bites the dust. It's BlockFi, a crypto lender now, filing for bankruptcy, still on the FTX contagion. What are you hearing?
Larry, it's a challenging time for the crypto industry. I think this is the big one, aside all of the challenges that have happened these days. The space is quite young, just about 14 years, and you know, the world has been hit with a lot of challenges from COVID, and challenges with the Russian invasion of Ukraine, COVID restrictions in China. Even up to this point, the Chinese are actually protesting for COVID, and all. So all of these challenges put together have actually weighed in more on the global finance, and also affect this asset. Let's not forget also that it's said to say that it's a risky asset. But BlockFi, which is the provider as a wealth management, it has a product for wealth management and crypto investors need, powered by the blockchain, has been really going through a lot, because they have exposure to FTX. What I mean by that, I mean FTX actually came at some point to say, oh, where they had liquidity challenges amounting from the issues that have arisen in the space earlier with stablecoin UST Terra. They decided to come to their rescue and actually gave, I think, about $400 million in a credit facility. But now they have to file for bankruptcy, because the company that actually gave them that facility is heavily being affected. And at some point, it also, the SEC, I will also say that the SEC actually has some issues with BlockFi at some point, because they actually came up with some products that the US SEC regarded as they need to register with the SEC, and they were fined, I think, about $30 million. You know, all of those things put together, this company doesn't have funds. They borrowed funds, and they're using all of these things to settle issues here and there. And at the end of the day, even FTX not managing their books correctly have actually snowballed into all of these things that have happened, and they had no choice. I think they are having about $293 million at hand just now. So it's just safe to say the best way is to file for bankruptcy and see how far they could be able to settle. But it is not very good, because this industry is built on trust, right? And the trust has been eroded gradually. But away from that, some other good things are happening. At least yesterday, we saw that Fidelity Investment actually came to say they are going to give exposure to Bitcoin retailers in the US, and also maybe globally with time. You know, so gradually we're going to build on all of these, but it's not really easy, because right about now, BlockFi have said that they are holding, they have in debt $1 billion.
Right. Well, I guess all the bad news clouding out, some of the good news we're seeing, in that industry. Thank you so much, Rume Ofi.
Thank you very much, Ladi. It's my pleasure. All
right, that's a wrap on the markets, and that's it on the show today. Thank you so much for watching. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube page. Just search for Channels Television on YouTube. Flip over to videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.